Welcome to the Probate Nation. My name is Richard Ruddy. Probate is a process to transfer the title of probate assets to the beneficiary of the decedent. As we have learned in prior shows, not all assets are probate assets, and there are different types of probate, some simple, others more complicated. Like a journey in one of those very slow-moving steam engine trains, probate of an estate has a beginning and several stops along the way. One of those stops is to deal with, file returns, and settle up all tax obligations of the decedent. Making this stop is necessary, so when this work is done, you can file the required tax certificate with the Commissioner of Accounts and get your final account approved. Then your probate train ride can continue to the distribution stop where the beneficiaries have been patiently waiting for your arrival with their inheritance. Today's show focuses on steps an executor needs to consider taking so he can sign and file that tax certificate. But more importantly, so the executor can be confident that he can wrap up the estate without any personal liability for the decedent's taxes. For those regular reviews of the Probate Nation, it is at this point that we typically introduce a guest or two to lead the discussion of the show topic. But tonight I will simply share with you what we tell clients about this topic and a few stories to illustrate the importance of these steps. So the first topic we want to talk about is really to go to the heart of this, which is we have a tax certificate, which they're going to show on screen, that is an affidavit that you have to file with the Commissioner of Accounts in order for him to approve your final accounting. And what this form does is basically force you to actually confirm under oath that all the taxes of the estate have been paid, or otherwise you have been inquired and you're not aware of any taxes, or you're holding assets sufficient to pay the taxes. And you do this under penalty of perjury. Now, in order to do that, though, there's a lot of things you're going to have to do, but let's just talk about the types of taxes this certificate covers. It covers local real estate taxes. It covers the local car tax, covers Virginia income taxes, federal income taxes, and federal estate taxes. So this tax certificate gets filed when you're filing your final accounting, though it can be required sooner by some commissioners. And you can't settle your final account unless this tax certificate is completed. Now, in some cases, the commissioner may also require you to file information. If you have to file a federal estate tax return, they may require you to file a copy of the federal estate tax return or some part of that so they can verify just what the estate tax obligations were and that they've been paid. So let's talk about the underlying duty by law that is called the duty of inquiry. Okay, so fiduciaries have a duty of inquiry in order to figure out what exactly where we are as far as taxes for this particular decedent. So you need to make an inquiry with the state, local, and federal tax authorities and figure out what exactly has been done or not been done in the way of filed returns, and is there any taxes outstanding. So the question is, how do you make that investigation? So there is, some people would suggest that you can pick up the phone and you could call the local county tax authority or maybe call the Virginia Department of Taxation. But just as a matter of practice, I went ahead and just did that the other day. I called the local city of Fairfax office and I said, if I call you up as an executor of an estate, will you tell me whether or not anybody owes any taxes to you? And the answer was, of course, no. And I think you could expect that the same answer if you contact the Virginia Department of Taxation and certainly the IRS. So the way you're going to figure out whether or not there's any taxes owed is you're going to have to write to these authorities. So that means you're going to write to the local tax authority that is where the residents last resided. You're going to contact Virginia Department of Taxation, and you're going to go ahead and contact the IRS. Okay, so let's talk about the communication to the local tax authorities. You want to go ahead and do something simple, but when you file that, here's some of the information you need to include when you make that request. Okay, first off, you're going to have to show that you have the authority to actually ask for this information. So when you write to them, you need to include a copy of your certificate of qualification that says you're the executor of this estate. You're going to want to include probably the last known address of the decedent, their social security number, probably the estate fiduciary tax ID number, and you're going to want to include certainly a copy of, you may want to include a copy of their death certificate, although that may not be necessary, but you may want to include that anyway. Okay, so you send all that information in under cover of the letter to the local tax authority and to Virginia. And they'll respond back to you generally within about, 2 to 4 weeks, and let you know we have returns filed, we don't have returns filed, or he owes this amount of money, or what the case might be. Surprising what you find out, though. I mean, it's not uncommon that I get a response back saying they owe $22 for the car tax, okay, or they have an unpaid real estate tax bill of $150 or whatever it might be. So you want to make that inquiry and then get that response. You have a duty, fiduciary has a duty to pay, and that's an interesting thing to keep in mind. You have a duty to pay the tax bills, okay? So the first thing you got to figure out, though, is do we owe any taxes, okay? And so, and if you do owe taxes and you make distributions without paying those tax bills, you could be personally liable. So we want to make sure that there's all the returns have been filed, and we want to make sure that we pay the taxes that are due. Okay, so when we reach out to the IRS, one of the things we have to do is we need to let them know that we're in charge. Okay, so we get to look at Form 56, and that is an IRS form which actually is a notice you complete to advise the IRS that you now are the person in charge of the estate. Okay, that's Form 56, Notice of Fiduciary Relationship. So that is the way in which you actually put the IRS on notice that you are the person in charge. When you file this particular form, which is fairly easy, it's only a couple pages long, you want to include a copy of your certificate of qualification so that, again, they can see the person that you're in charge. Okay? When you file this, once it gets processed, then if you call up the IRS, they will talk to you. If you haven't filed this, then they don't know who you are or why you have any authority whatsoever to receive any information about this decedent. So you have to file IRS Form 56 with the local with the IRS and let them know that you are now in charge of the estate of this particular decedent. Now, how do you file that form? You fill it out and it has to be mailed in, okay? And there's instructions as far as where it gets to be mailed. Now, once you've done that, then the next thing is you're trying to figure out, has this decedent filed all their taxes? Okay, so how do you do that? So what you want to do is you're going to go ahead and you're going to file a request for information about the tax returns that have been filed. And what we normally see filed is we file Form 4506T as in Tango, IRS Form 4506T. And what you're going to be asking for there is a transcript of all the tax years. So if turns out that someone died in 2019, I want to know about all the returns from 2017, 18, and 19. Had they been filed? And if they've been filed, is there any taxes that are owed? Are there any refunds due? Okay. So I file that 4506T, and that'll tell me a lot of that information. And if it turns out that the returns have not been filed, then I know I need to get to work preparing a tax return for 2018 or 2017, or whatever the year is that has not been filed. Now, how am I going to prepare that tax return? That can be a challenge because you may not have the records about the 1099s, interest payments that are received, mortgage payments that have been paid, and things of that nature. So 4506T can also give you a lot of that detail. I had an estate not that long ago where they hadn't filed tax returns from 2015 on, including the year of death. And I had no records. I mean, I had nothing, okay? So with the aid of this particular form, I was able to get 1099 information about all the various income that was received by this decedent, both before he died and after he passed away. I mean, 1 year alone was probably about almost an inch thick with stuff in it, okay, reporting different things. This will allow me to then give the information to the CPA so we can begin to compile both his final 1040 tax return and all the unfiled fiduciary income tax returns, okay? But we've got to do that. Then this is the way I find out where I am as far as these particular tax filings. What this also tells you when you get that transcript is that it might very well be that somebody actually has a refund due on some of those tax returns. The problem is that you've got to make sure that you act quickly, because there is a statute that actually says that if you don't file your return within a couple of years, that you could lose the right to get a refund of any money that might be due to you when you do file the return. So when I go to file the return, I actually had this happen for the first time I ever came across this a couple years ago. And we filed the return, do a refund of maybe $1,000, but because the people in charge before had not done anything for so long, too much time had elapsed before I got involved, and we could not get the refund. So you want to file this form 4506T and request. Now, it might be that you need to request more than tax years than the form covers. You only can collect information on 4 years at a time, but so you may need to file more than one form. Okay. This form actually is very nice because you can actually fax this form in. When you do fax it in, when you prepare the form and when you prepare to fax it, I would suggest that you also attach to that a copy of the Form 56 you filed with the IRS already, along with your certificate of qualification. So again, it's very clear to them that you are the person in charge and you are entitled to receive this information. Okay. Now, it may very well be that you want someone else to take care of some of this stuff for you and be able to talk to the IRS for you as you're the executive, but you may want to appoint somebody. From an IRS perspective, they will not talk to somebody unless they have been duly authorized to do so. So the way you do that from a federal tax standpoint, you have to actually fill out a power of attorney form. There's an actual form, IRS Form 2848. And that's the form you want to get completed, and you would include that and send that off to the IRS and identifying the taxpayer, the decedent, the state, and all of that information and the person you want to authorize. And then once that's been processed, then they can actually talk to that CPA or attorney if you don't want to have those contacts. The next form that I want to call your attention to, and again, these are all things you do in order to position yourself to be able to sign that tax affidavit and know with confidence that you can do it and that it's correct. When you file a tax return, the IRS has a certain period of time in which to assess that. So they could take as long as 3 years in order to do something once you filed your tax return. If you want them to act more quickly, there's a way to request them to act what they call promptly, and that's where you ask them for prompt assessment. So there's a special form, IRS Form 4810, and these are for returns that have been filed, and you can ask them to promptly assess, and they will act quickly. Some commentators, are a little concerned about filing this because it might trigger an audit, but it does provide confirmation no taxes are due, and in my experience, has not been an issue about getting audited. The last form that we want to file in this whole process is Form 5495. And 5495 is the form which we talk about discharge of personal liability. We want to make sure we pay all the taxes. We want to make sure we actually pay those. We file the right returns. But when it's all said and done, we want to actually be sure as the executor that I don't have any personal liability and I'm free of that responsibility, because I do have a duty to pay. And the way I do that, and the way you can do that with the IRS, is you file a form called IRS Form 5495. Okay, this form applies to both income taxes, applies to federal estate taxes, and applies to federal gift taxes. Okay, so on the income tax side, it covers both your personal income tax returns for the decedent, as well as all of those fiduciary income tax returns that you file. So you fill out the form for as many years you need to deal with, and whatever returns you want to cover. And that, again, these are returns that have been filed. You have to mail the form in, and generally the IRS has 9 months in which to respond and either pay the taxes that are assessed at that point, or otherwise they get a release from the IRS, or if the IRS doesn't respond, then you're discharged. You don't have any personal liability at that point because you've asked them. And this is a very good form. I strongly recommend that this be done by anybody who is serving in this role, so we know that we are cleared as far as the taxes. Lastly, then, once the estate is ready to wrap up and you're done with this, you've made your distributions, then we want to file Form 56 again with the IRS. And what we do with that form is we actually terminate the fiduciary relationship. We tell them we're no longer in charge because there's no more assets to be distributed. Everything's been distributed, the estate is done, and we let them know that don't send us any more notices because we're not handling this estate anymore, okay? And this cuts off claims against the fiduciary, again, assuming all the returns have been filed, okay? This has to be mailed to an appropriate address. You'll have to look at the instructions. And generally you want to file this, after the final account has been filed and approved, final fiduciary tax returns have been filed, so that we can go ahead and make that request to get that approved. Some practical advice. Let's talk about that. So practical advice and sort of a series of things I would suggest you need to do is I'd file Form 56 early on in your administration of the estate, and I would get tax inquiries out to the local tax authorities and Department of Taxations right away. We need to find out whether or not he's paid his returns, filed his returns or not, okay? We saw that for someone who had not filed returns for several years, we found that out, and it took a long time to get those returns compiled because we had to go gather information. So you want to find out if there's a problem early on, and that's why you also file Form 4506T. Even if you think that mom and dad filed everything on time and they're good to go, it doesn't hurt you. And it's some interesting what you might find in the process of asking that request, okay? Then I would make sure that you file 45495, IRS Form 5495, and once you're ready to wrap up this estate, get yourself discharged from any personal liability. This is an important base to cover. You want to make sure you file all unfiled tax returns, get them filed, pay the taxes, and again, file that 5495 request for discharge. Once you're done, file Form 56 to terminate your fiduciary relationship and cut off your connection with the IRS. Now, as an extra level of protection, most executors, and certainly ourselves are included, whenever we serve or we advise clients, even though they're making distributions to a handful of family members, we still recommend that they have those beneficiaries sign what's called refunding agreements, in which they agree to ante up money out of the inheritance they received on a pro rata basis based upon how they received it. Such money as may be necessary to pay tax bills if it turns out that the IRS shows up 2 years later and says, oh, by the way, we were wrong and you owe us, $10 of taxes. At that point, the fiduciary, the executor, has no money. And with the refunding agreement, now the IRS can look through and they can go after them directly so that they have an obligation to repay. And that just is a good suggestion. Closing comments, observations. I think what I would say to you is, do not ignore this tax risk. This is a real tax risk. You want to make sure that you cover the steps that we suggested here, even if it's a close family situation. You just never know, even though you think you've been filing everything correctly, and you don't have not underreported income, is just a good idea. You want to protect yourself. File that 5495 and get that discharge, okay? But you only get the discharge if you file all the returns. So you got to go through the steps to figure out and make sure all returns have been filed. And then lastly, I would certainly seek the advice of experienced estate administration counsel or CPA to help you with this particular step, because this is kind of a complicated area that is not something you would regularly see. It really is not something for a do-it-yourself project. Okay, so in closing, I would say setting up with the tax authorities is a very important stop you must make in the course of your probate train ride. For those executors who have been handling mom and dad's finances, paying their bills, and filing their tax returns for several years, you may have a high level of comfort that they owe no taxes. But other executors will not have that same comfort level or knowledge when they first get appointed to serve. Consequently, I suggest to all executors that each of these steps are important for two reasons. First, it allows you to sign the tax certificate required because you have the documents to show your diligence to find out what tax returns have been filed, you filed the returns that need to be filed, and you paid the taxes that are due. And second, it cuts off your personal liability exposure for the taxes that those tax authorities may later claim are due from the decedent. Why? Because you asked and were told in writing that the decedent did not owe any taxes. They told you they owed some taxes and you paid them. They discharged you from personal liability and you closed the estate and distributed the remaining assets to the beneficiaries in reliance on this personal liability discharge. Finally, we certainly advocate and encourage executors to do many things in the course of their probate journey, but most executors should not take it upon themselves to prepare the documents discussed in this show. Get a CPA or a state attorney to handle this for you, or at least let them review what you prepared before you file something. It will be money well spent. This brings us to the conclusion of our show tonight. We hope you found it helpful. Replays of this show and all the shows broadcast to date, along with other helpful information, can be viewed on the Probate Nation website. On behalf of the Probate Nation, thank you for visiting with us.